Hello, trading is closed on December 21st, 2016. I said yesterday I thought the most likely outcome for today was a gap outside of the day's range, and I thought it would be down. Well, we didn't trade outside of the day's range early. When that doesn't happen, the next most likely thing is we close a little changed. We closed down 5.5 points. It's only 1/4%. But that's really more of a move than I usually expect when I say closing little change is the next most likely outcome. So I'm going to say neither one of those two things happened, although with an hour left to trade, we really had changed hardly at all. Let's look at some other stuff and then review the general picture. Early on we got a buy. We hit the minimum. Almost always we get more than the minimums on an ultimate, although we don't have to. And we don't have to get it anytime soon, but I'd be suspicious that this high will be overcome. We also have a wall into the close and the close right at the low of the day. All these make it plausible we could have a gap up tomorrow, although it isn't required. Whether or not we have a gap up, I don't think that's where the action is. We had a few price targets we wanted to hold, and so far they have. We had 2274.50 for the high of this leg. That was off by 3 points. That's held. We wanted 2272.26 to hold, although we said a small violation would be all right. That's held. So we've held the numbers we had to hold on the upside. Let's look at the downside. We've now gapped up 5 straight days. None of these highs held. Usually after 3 days of gapping up in the same direction, the market runs out of steam. 5 days gapping up, we can't hold on to any of these highs. Furthermore, we can't hold on to these lows. That's a very negative pattern. Here was the gap up to the all-time high. That's all been reversed. This can still be reversed by gapping up and taking out these highs. Otherwise, this is a very negative pattern. And remember, once we take out this low, there could be a very steep drop, December or not. Let's take a look at the longer term picture here. This is a weekly chart. Here was wave 1. You'll notice when you have an impulsive move, there's no overlap. Here's wave 2. You'll see how it overlapped onto itself and into wave 1. Here's wave 3. There's no overlapping here. This is wave 2 of wave 3, but the wave 3, no overlaps. Now this here was a clear overlap, and this rally here too is an overlap as well. This is not an impulsive move because of the overlaps. I suppose there are some ways you can count it. You can say it's impulsive if it's wave 5, and this is an ending diagonal triangle. I'm not calling that. I guess you could call this a 1, and that's a 2, and we're in 3. I can't make the waves of smaller degree work for that count. I think this is a rally in 3s with overlapping waves. I still think we're in 4, and that's A and that's B, and I'm expecting a C before we get the wave 5 up. So for tomorrow, we have a failure to hold on to the highs after repeated episodes of gapping up. There might be another gap up early on, but unless we can overtake recent highs, and I'm not expecting us to, unless we overtake recent highs, we should be ready to start a pretty good drop. And that's today's call.